Mr. Manish Garg, the CEO at Interarch Building Solutions. Mr. Garg, hi, morning. Good to be speaking with you. And you have received this order of 128 crore rupees from a major FMCG player. In light of this, can you give us a sense of what your cumulative order book is looking like right now, and what is the revenue visibility from this order in terms of a timeline?
Yeah, good morning and thank you for having me on the show. This order is from the major global FMCG company for a new plant in South India. And our order book, as we spoke recently after our Q1 results, stood at 1,864 crores. But in our industry, the order book does keep getting added up by the new orders. And our speed of execution also is increasing. This particular order execution line is about 9 months in totality. So all our orders that we get have to be executed between 6 to 9 months, barring a few which have a 12 to 16 months timeline. So overall, we have incoming orders and we have the execution speed. So overall, I should say that our speed of execution and our input orders have to match with the future capacity as well. And we have a lot of capacity already commercialized. We have a lot of capacity coming in. So I think these major order wins are making sure that our order book keeps increasing as we increase our capacity, because our execution of the order book is going to be much more better than what it has been over the last few months.
Okay, got that, Mr. Garg. Hi, Meryl here, also joining in. I'm understanding this order. Yes, sir. I'm understanding this order is from FMCG and a home care, beauty and wellness manufacturing facility. And I'm noticing it is a bit outside your traditional industrial and infra order book. Can you tell us if this is the sort of industry that you are going to be seeing more orders from going forward, or was this more of an opportunistic win?
No, I would say that it is basically an industrial project. We do these kind of projects. In fact, we have worked with the same FMCG player earlier also for various products. So it is not really something that is outside our normal business. It is very much our normal business. We do buildings for any kind of manufacturing plants. So here they are manufacturing this kind of products. Somebody could be manufacturing cars to biscuits to anything. So I should say that it is not really a new segment or something. It is within the segment that we are already operating in, and we have done many jobs of this kind in the past as well.
Mr. Garg, I'm trying to understand your margin outlook. While on the year-on-year basis, your margins this time were flat at 8.5%. Just trying to understand the dip that we've seen on a sequential basis, because quarter for FY26, this number was at 10.5%. What has caused this dip on a sequential basis? More importantly, what would be a good margin expectation for the rest of FY27?
Yeah, so I think we do keep updating the market and our investors that ours is also some sort of a cyclic business. So our quarter one and quarter two, because of the monsoon and other factors, is always lesser than the quarter three and quarter four. Quarter four, of course, is always the best. Now, if you were to look at our Q1 numbers for this year and compare them YOY with the last year numbers, our profit was up actually 24% on a top line growth of 20%. So overall, our EBITDA actually on a year-on-year basis, not sequential basis, because we feel that given the cyclicality in our business, we should be comparing more on YOY rather than the sequential quarters, because we have some seasonality in our business. H2 is always better than H1.
Understood. We're going to be watching out for H2 this year as well. Mr. Garg, this 250 crore rupee QIP amount that you have raised, can you quickly give me a breakdown of how the utilization is going to be and how is it going to pan out in terms of a timeline?
Okay. So our 250 crore QIP approved by the board, and we are raising it, is going to fund our two major projects. One is a brand new pre-engineered steel building plant in Gujarat. We already have operationalized the phase one of the plant one. Phase two of the plant one is in advanced stages, and maybe in a couple of months it will also get operationalized, which will cover and complete our plant one in Kheda, Gujarat. So part of the QIP is for a brand new plant two in Kheda for about 40,000 metric tons. And the expansion of what we call now the heavy structural steel, which is a line of business for us, for which our phase one is already very advanced stages in
Okay.
trial production sort of.
Okay.
That is to fund the phase two and phase three of the HSS in AP. And
Okay.
both of them put together will be about 190, the phase two and three of heavy structural steel.
Understood.
And rest of it will be for the general capital purposes. So that will.
Understood. Right. Mr. Garg, very quickly, I'm just trying to squeeze in one last question. You've maintained your FY27 revenue guidance at between 2150 and 2200 crore. This implies an 18% volume growth. What really stands out is your FY28 revenue guidance. You've hiked to 2700 crore from 2500 crore earlier. What is giving you this visibility right now that you've gone ahead and hiked your FY28 guidance, and what could be some levers at play?
Yeah, so two things clearly. One is our very strong ever-growing order book, which is very purposely we are increasing because we have these two capacities, Gujarat as well as heavy structure steel in AP coming on stream within, by the end of this year, maximum in full-fledged. So we will have about 60,000 tons coming in, which will be fully utilized next year. And I think that is one of the reasons for us to have hiked up our FY28 guidelines. So this is our strong order book and the additional capacity that is being commissioned. These two factors.
Understood, and that sounds really good. Mr. Garg, thank you so much for your time and congratulations on this new order. We're going to be tracking your order book as well as volume growth for the rest of the year. And I also gather that you're targeting average order inflows of 600 crore rupee per quarter. So that keeps you well on track to achieve this 2200 crore revenue guidance for FY27. Thank you so much for your time. Good to be speaking with you today.
Thank you very much.
Thank you so much.